All right, welcome back to Stock Tricks with Nick for this week's trading recap, December 7th to December 11th. Apologies on not getting this out yesterday. Power E-Trade has been down, so we made a couple adjustments that you'll see today. This week was another choppy one in the market. Wednesday, a lot of the growth stocks pulled down, and Friday kind of had a mini sell-off as well. So happy to be plus $80 on the week. It's not a big win, but not a big loss either. A few very large winners paid for a lot of small losers as I tried to leverage up a little bit on Tuesday when things started working out. Um, if you're new to the channel, we do these trading recaps on Friday. I put out a breakout watch list on Sunday. And in the middle of the week, either Tuesday or Wednesday, we do a live stream where I update that breakout watch list and we go over some stocks that you guys want to see in the comments. So if any of that sounds interesting to you, please subscribe to the channel, Stock Tricks with Nick, and give me a follow on Twitter, StockTwits, and TikTok. All right, you can see some notable winners and losers for the week here, and we'll go over each of those in the charts later on. All right, so for the agenda, we'll break down how the market did this week, how both of the watch lists did, and go through some of my open positions that still are working out, and a breakdown of some finished trades, and both on the winning side and the losing side. Because if I'm going to show my winners and the winning setups and prepare you to trade those winning stocks, you also need to be prepared to take a loss the right way and to keep losses small. So we'll be going over some of my losses as well. Quick disclaimer. This is all for educational purposes only. Trading stocks has its own risks. Please do your own due diligence. So market recap, you can see the S&P 500 down about 1%, QQQ's a little bit more, while Dow Jones down only 0.5%. QQQ snapped an 11-day winning streak on Wednesday, and it did so with a high volume pullback. With S&P and QQQ were hit most with that. Dow Jones not as bad, but all three of the major indexes touched their low of the days, touched their 20-day simple moving average on Friday. So let me jump into stock charts. This is the new way I will be showing the charts that we go over today, just because E-Trade has been giving me a lot of problems lately. So this is S&P 500. We have up here the comparison to QQQ, which will come in later for relative strength, and then down here we have the average true range. So seeing if we can get some tight pivots on the trades. So you can see S&P 500 basically had the one inside day on Monday, setting up a good green day on Tuesday, and then Wednesday was that large pullback on high selling volume, and the low of the day touched the 20-day simple moving average on Friday. Still over this line here, so holding on there. Let's go. Oop, not QQ. This you can see much larger bar on Wednesday, much higher selling volume coming with that. And again, on Thursday, this rallied but could not close over the 8-day exponential moving average. That's this purple line. And then on Friday, the low of the day touched the 20-day before rallying into the close. Let's go Dow Jones. And this one I wanted to kind of point out. Let's change that. This is getting a little bit wedged up, so I figured we would get a pullback sometime shortly, and we got it on Wednesday. I had a short position on the DIA going into the week, just to offset some of the long positions that I had. And so far, that's been working out. It looks like we're kind of breaking to the downside of this wedge. We'll see how long that holds for, but that is the Dow Jones, and then wanted to check on FFTY. We covered this. Here, let me change to like 6 months. We covered this on Wednesday's live stream, talking about um, the chop box, where you can see for a while now, since September's highs, we've been trading in this kind of choppy market, this box right here. So we had that pullback in September and then rallied all the way nearly up. But then we had the election uncertainty, vaccine came out, and you can see it has not been easy for a breakout trader. This is FFTY, the IBD top 50. All right, so that is the market recap. Next, we're moving on to Sunday's watch list. You could see we had uh, these are the stocks that moved up 5% or more since Friday's close, and these are the stocks that closed down 5% or more. And you can see we had a average gain on that watch list of 1.5% compared to a down week in the market. So we had some good stocks that we picked going into the week. The big winner was Zillow. Um, we'll be covering Zillow, DAR, and AXTI with some technical analysis now. AXTI is a little misleading because it did have a breakout and I was able to make some money on that, and then it reversed. So let's cover those guys. First we have Zillow, and this was on our watch list because we had um, nice nice move up here. See if you can see that. Yeah, 42%. And then from the top, we had a pullback of 20%, and then a pullback of 10%, and then this mini pullback of 5%. So that's setting up that VCP setup that we like, volatility coming in. And you can also note that volume is getting quiet in here, and the only kind of large volume day, whoops, the only large volume day came on this green day right here. So that is a good sign. And then everything got really quiet. You could see ATR came way in, setting up the trade. This was last Friday's close, and we said you could buy a break over Friday's high, but I was looking at a break over the high on this day. And since then, you could see really large volume coming in into the end of the week, while this broke out and has really held. Now it's closing above its upper Bollinger Band near the high of the day after they were kind of squeezed. So uh, really nice breakout setup that we called out on last Sunday's video. So that is Zillow. Let's go DAR. So this is one that the breakout kind of already started on Friday, but we were looking for a pullback to get back in. Um, you could see really nice tightening of the average true range coming in. Volume was coming in as this just kind of moved sideways down. Volume or the price range tightened up. We have the 20-day simple moving average providing support about 3 times through that range. And it's just sitting on the 8-day exponential moving average. So after that, you could have bought the break over the previous high. That would have happened on Friday, but we had that pullback on Monday, setting up the trade. On Tuesday, it pulled back even more, touched that 20-day simple moving average once again, and since that point, it just has been running. The last 2 days closes near the high of the day, above the upper Bollinger Band, and similar story. A lot of where's the ellipse? A lot of good volume coming in here. So, and price relativity compared to the QQQs going up. So everything that we want to see in a nice breakout. That's DAR. And then let's cover AXTI as well. So this is one that I had bought earlier last week, I think, on this day right here where we pulled down, made a third lower low, and then rallied to recapture the 8-day exponential moving average and move over the previous day's high. So I bought with the break over the previous day's high there. Got filled at 987, I believe. Um, kind of sideways action going in. You can see this uh, and this pullback, and ATR is getting tight, volume really lightening up. And then we had that really strong breakout on, I think that was Tuesday. Yeah, on Tuesday. Got to sell some at 1125. Thankfully, I did. So somewhere in that upper wick, right when it came back, sold about a quarter of my position, maybe a little bit less, 20%, into that upper wick, and then got stopped out at my entry point the next day when we had this large red candle. So once a stock breaks over, typically 7%, I'll move my stop up to my entry point on the rest. So I'm protecting my entry and not letting a big winner turn into a losing trade. So even though the rest of the week this pulled down, had a really long lower wick on Friday, um, I was able to make it a profitable trade just by selling some into strength, protecting my entry. And I did that a lot on Tuesday as I was trying to take profits and leverage up, really start to uh, press the risk. But I was moving all my stops up. I was taking some profit when things were going. So when everything pulled back on Wednesday, it wasn't as destructive as it could have been. It was a bad day. But when we bounced back on Thursday, I made more than I lost on Wednesday. So um, that's AXTI. Could have been a winning trade, but ends up on our big losers for the week just because it did pull back the rest of the time. So that was Sunday's watch list. Midweek movers, we did this on Tuesday, again, to celebrate the 1-year anniversary of Stock Tricks with Nick. Thank you again for all your support. Really appreciate that. From Tuesday's close, our average gain was 0.4% on the list, which during that time, market was down 1 to 2%, depending on the indexes. DAC really took over for us, and OMI was a stock that I actually traded and had some size on, so that was a good win. On the downside, CPS, Beam, HIBB, all losers over 5% since Tuesday's close. And remember, we had that big pullback on Wednesday, so I'm surprised the watch list did as well as it did. We'll be covering DAC, OMI, and HIBB. DAC. So you can see pullback. Let's see what the pullback was, because I think this was a high tight flag. Yeah, 250% up there. And then we had a pullback from the high, 26%, basically a high tight flag. That's where it runs over 90% in 8 weeks or less, and then pulls back within 25% from the high. So 26%, close enough. We were looking for a break over after this kind of mini rally, pulled back, and then we were looking for a break over that high as a buy point. So I think that would have came on, or you know what, since this was Tuesday, that already moved. We had the inside day on Wednesday. So while everything else was selling off really poorly, this had an inside day where the high and the low of Wednesday's candle are captured within the high and the low of Tuesday's candle. So that shows great relative strength. You can see uh, relative strength compared to QQQs just in that strong uptrend, even though the market was pulling down. That's a great sign. And then the next day, we get a move higher, and then the last 2 days really start taking off. And you could see again volume heavy as this starts extending out of the base. That's a great sign. You want to see volume heavy on a breakout, really light on a pullback. And now we get a couple closes near the high of the day above the upper Bollinger Band, getting the trade going. So that's DAC. Next we have, what was, OMI, OMI. This is one that I had been in a little bit earlier on this. Oops, hit annotate. This is another high tight flag. You got a move of 104% up and then a move of 21% down to the low. So after it made that 21% move down to the low, it starts riding up the 50-day simple moving average right here. And I took the trade on this candle right here as we broke over the high from these 2 days. And then it kind of squatted on me, but didn't ever violate my stop loss. So stayed in the trade through this kind of sideways action. And then things got much tighter as we were coming through here. So on Tuesday, we called this out because this action coming in, you have the average true range coming in, volume lightening up, going into the breakout that we had on Wednesday. I think that was about 12% breakout. Let's see. So to the high, it was 15%, closed about 12 or 13% on the day. So sold some into strength on that day, sold some the next day as it pulled down, sitting about half of my position size on, but um, again, making that breakout on heavy volume, which you like to see, and then the pullback on light volume. So not too concerned with the rest of my shares. Have my stop and my entry now, so get to see a risk-free trade on the rest while I already have booked some profit on the trade. That's OMI, and then HIBB was one of the larger losers from the midweek movers, and unfortunately, this was a trade that I actually took, and got stopped out of. This was one of my losses this week. So we were seeing a break over that line as a possible buy point. We got there on Tuesday, but it wasn't too far extended. So I said, I got in on Tuesday with a break over there, but I said because it's not too far extended, a break over Tuesday's high would be another possible buy point. But on Wednesday, we had that pullback, and I got stopped out on Thursday as we undercut Wednesday's low. On Friday, higher highs, higher lows, closed right at the 8-day exponential moving average. The volume on that pullback day was not nearly as bad as the volume on some stronger pullbacks. So keeping this chart along the watch list because this could firm up again and get going. I think this was, let's see, up 130% and down 35. So not a high tide flag, but rocket base. So that was HIBB. Those were the two watch lists. So we had some winners there. Next, we have the current holdings. So you can see because we are in that choppy market, a lot of my position sizes are much less, and I have too many positions on right now. 17 long positions open. Only one of them are over 5% exposure for my portfolio. And while the market's choppy, you're quicker to take gains, you're quicker to protect your entry point, and you don't want to put as much size on trades. So kind of as a result of that, even my 5% positions that I'm putting on, I'm taking half off or so when they go up 2 times my risk, or I'm getting stopped out of half after it goes up a little bit, and I move half of my positions stop to my entry. So you can see 12 positions are between 3 and 5%, and 4 are between 0 and 3. I do have 2 short positions on. One is 12% of my portfolio is short the Dow Jones, and then I have a 2.7% position long SQQQ. We'll be looking at PRLD, which was the big winner for the week that really financed the rest of my losing trades, along with OMI and DNLI. Oh, we already covered OMI, so we'll be covering a couple others. So let's go PRLD. this was a kind of ideal trade. So let's break this down. We had an IPO high tight flag, so that moved up 110%. Let me zoom down. 110%, and then only pulled back 22%. So at that point, jumped on my watch list. IPOs had been working. IPO high tight flag, similar to CRSR before that took off. So wanted to take a look at this and get size on the trade. So as it was coming in, you can see this just kind of downward move to the 20-day simple moving average. And once we got the 2 days, that would have been Tuesday and Wednesday, kind of sideways action that set up the trade for a possible buy. And on Thursday, I had a stop buy order for just a break over Wednesday's high, so that was 51.92. It broke, got filled at 51.93. I put 10% of my portfolio on the trade. And what I really liked about the trade was on Thursday morning, it pulled back and undercut Wednesday's low and then rallied and went over the high. So it shook out kind of the last people that had stops under all these lows. You see it violates that, shakes those traders out, and then just rips right through. Sold some into strength both of these days, sitting about half my original position, maybe even a little bit less than half my original position. Got 20% or so on the portion that I did sell into strength. So 20% of the 20% on the trade of a 10% portfolio trade. That's 2% portfolio gain just on this trade alone. Really helped out the rest of my week. You could see ATR was coming way in as this was tightening up. Ideal setup here. So as PRLD, let's see, what else did we want to look at? PRLD. Just took this trade on Friday, CYH. Similar story to it. Still getting used to this platform. So rallied 100, call it 200%, 199%, and then from the peak has pulled back now 30%. So does violate that 25% high tight flag, but November 9th to where we're at, that's about a month long. Ideally, I would have given it a little bit more time to set up, but this is tightening up so well already. You have the first pullback, 31%, the next pullback, 17%, and then kind of this third pullback was 7%. So you have that volatility contraction pattern. As those pullbacks are lightening up, you also have volume coming way in and average true range coming way in as well. So this had, outside of the base being a little bit short on a failed high tight flag, set up really well. So I took the trade with smaller position size on Friday as we broke over Thursday's high. So not one that's too far extended. Let's keep an eye on that. I'll probably throw it on Sunday's breakout watch list, but that's CYH. Whoops. And wanted to cover DNLI as well. So this was one we had on last week's breakout watch list. Another high tight flag. So we had a move of 137%, and then pull back from the top there of only, I think it was, 19%. Really nice setup. It was coming in through here. You had volume getting nice and quiet. The one big volume day was on a green day. It was this candle, just slightly a green day, but basically a false breakout. And then you also had ATR coming way in there. So that set up the trade for us. Bought with a break over bought with a break over the high from that false breakout on this day, and since then we had big volume coming in, just ran, exploded higher, took some into strength, and then am just protecting my entry on the trade. Um, has shown great relative strength as the market pulled back. So that was awesome to see. Glad I got the trade on. Glad we put it on the breakout watch list. That was DNLI. A couple losing trades that I wanted to cover. Let me jump back to there. So BALY, BALY. After everything shook out on Wednesday, this was a high tight flag that was still formed up and hadn't pulled back. So you could see this moved up 124% and then only down 16% to the lows. And it had this long squat day. So that was kind of concerning, but we just ran right over that. And then I bought as it was holding in this upper range. Whoops. Not rectangle. I actually bought as it was holding up here, thinking we were over the previous high as long, and it was showing great relative strength until like 145 or so. So I put that trade on because I got stopped out of a lot of trades on Wednesday and wanted to have some exposure if we did get that turnaround Thursday. And we did get that turnaround Thursday, but unfortunately, not with BALY. This turned the other way and squatted on Friday, and then just broke through and a couple previous lows and on higher volume. So um, kind of a little too risky, I think, looking back on it. Probably shouldn't have put on that trade when still had some positions on. It wasn't like if we rallied on Thursday, I was going to be completely out of the run. So biggest loser of the week. Need a lesson learned. Maybe put less size on the trade if I'm trying to catch that. So that was BALY. Next we have Frog, FROG. This was a IPO that got really quiet through here. Let me zoom down a little bit. Really quiet through here. Then we rallied on larger buying volume than almost any other time, one of the sell bars, but formed up through here. And well, actually, no, sorry, pulled back and then rallied, had that nice pullback day. So I bought with a break over this high, and unfortunately, just pulled back on me. You can see that large squat day. Hate to see that. And after it did that, 2 more days of pulling back stopped me out of the trade. So those squat when stocks squat, it's a good sign. Well, it's a bad sign that the breakout isn't formed up, isn't ready to go. So what I'll be looking for if we do get a break over basically my average gain on a winning trade, 7%. I try to move at least half my stop to my entry, so when it does reverse and continue downward, I won't have as much size on the trade. And then if it just rips, takes off, I still have some money in it. Can always add back if it pulls back on a day and then sets up the trade again, but got to reduce risk when you're wrong. Let's go APPS. 2 more for you guys. Looking back on this one, it kind of does look wedged up through here. So maybe not a trade that I should have taken, but lesson learned. We had a couple days where volume was so good, like that day, that came on an extension above the upper Bollinger Band, and then we got 2 days pulling back, undercutting a lot of previous lows. So I thought that was kind of the last kind of shakeout before the stock ripped, and then we had just this like nice easy glide back higher, and that itself was like wedging up those couple days. So when we got that pullback on Wednesday, got stopped out of the trade, touched its 20-day simple moving average and has since rallied right back up to the spot. But um, I always stick to my stop losses because I don't know how long it's going to be pulling back. Um, when you have your money in the market, it's at risk. So I only want my money at risk if it's in an uptrend and setting up for a good breakout. So that was APPS, and we'll end with FOUR. This one has been giving me so many problems. I keep on taking the trade because it's an IPO with a lot of volume. It keeps setting up, looking like it's just going to rip. Um, I took the trade the most recent time as this was coming in. We had a couple candles pulling back in, bought on a break over that diagonal, and was in the money immediately. You can see this upper wick. Um, After it rallied, I did protect my entry with half of my position size, thankfully. Otherwise, it would have been a full stop, because you could see it rallied in the morning on Wednesday and then just all the way down. What was that drop? It was. It looked like it was just about to absolutely go because it finally cleared all those previous highs. Yeah, down 10% from the high, and you're not going to hold that kind of move with that kind of volume on that pullback. Since then, we kind of rallied back, and maybe it firms up again, but I'm going to give it a little bit more time for the average true range to come in before I try and take the trade again. It's good to see relative strength picking up. That was kind of the idea behind the trade, but uh, unfortunately, you get candles like this, and there's not much you can do with that. You just got to get stopped out and hopefully protect your entry if you did get over, get some profit on the trade. All right, so that is the trading recap for the week. Plus $80, better than losing $80. Market continues to stay choppy. Only about 50, a little bit under 50% invested. So if you enjoyed this video, please subscribe to the channel, Stock Tricks with Nick. Leave a like. If there are any stocks setting up that I should take a look at for the breakout watch list tomorrow, please comment them below. I'll get to all those, and then give me a follow on StockTwits, Twitter, and TikTok. Have a great weekend.